Hello everybody, here's another video for you. It's been a few days or a little while since I put a video on for you, and just wanted to show you a couple that I recently pulled off. And I will just want to show you some examples of how to better manage some of your exits. And on this one I didn't manage my exits that well. I made some money on the trade, but could have made a lot more had I got out when I should have and held on when I should have. So this was last Thursday's chart of KB Homes. And in the morning it was setting up with the lower tops on the first several candles through the fourth, and on this fourth one here the high was 1713. And just as I had gone over to this chart, there was some news had come out. I had CNBC on. There was some housing data that had come out that was positive, and all the home builders were turning up. And I'd actually seen that a couple of the others had already started to go up, so I had come over to KB Homes, and it hadn't gone through its previous high yet. So I ended up buying 1,000 shares of this at 1714. And what I've been doing lately is trying to peel off a few shares in the beginning just to cover my commissions as I scale out, and make sure that I'm going to be break even at worst case scenario, and hopefully a few bucks in the positive as well. So what I had done on this one, again, I bought 1,000 shares at 1714, and where this first line is, I had just got out of it quickly, about 500 shares at 1729. So on that one I had netted about, grossed about $75 minus commissions. And generally what I'll do is try to scale out, and for some reason, I don't know, I got excited on this. I guess I saw that it was hitting the prior day's close level, and I exited the rest of the position, 500 shares, at 62 cents. Unfortunately, the scale's a little off here. You can see there's a lot of space above this, and if it was the full chart, you'd be able to see a little better what it looks like. But I did get out of it at 1762, so around the level of the second line. So again, normally what I would do is try to get out of it, about half of it here, 250 shares, and let the other 250 ride with some stops in and around this area, which would have allowed me to hopefully get in over $18 per share on this one, which would have been almost $1 had I got it out at 18. It did run up close to 18.40, which would have been about $1.30, almost $1.30 per share on that. So unfortunately I didn't capture all the gains on this. Today I managed to trade a little better than that one. Let me pull it over here. The stock itself is Consolidated Edison. I was just scrolling through some of the energy stocks and came across this one. It was shaping up nicely. Had a big wide or long candle on the first one. The second one was quite short, less than 20-cent range on it. High of 40.35, low of 40.21. I bought it on this fourth candle as it broke through this prior one. And I picked it up at 37, so 40.37, and my first exit was at 47 cents, so right here. I got out of only 400 shares there. Got me some quick profits, just again to cover my commissions. As it approached the high of the day here, I got out of another 300 shares at 74 right here. And then I let the rest ride the last 300 shares up to 41.11, and I'd actually had seen it go up to around 41.20, and as it pulled back through here, I got out just before it had dropped off to here. Again, you can see it did end up going higher, but on the trade itself, minus commissions, I was $332 profit. So again, I'm a part-time trader, just like to trade for an hour or two in the morning before I head to work. So any day I can pull $200, $300, $400 out of the market before I head into my real job, I'm certainly happy with that. So on this one, I did manage the trade a little bit better and made some decent money on it. So again, I hope the videos help. I hope this will help you manage your trades a lot better. I guess one of the most important things I can discuss here as well is when you do buy these breaks of prior highs, make sure you put your stops in and let those stops sit. You don't want to monitor that trade and move your stops down because you think the trade is going to turn. Probably one of the biggest mistakes of new traders, amateur traders. I certainly don't consider myself a professional, but one thing I have learned is to get those stops in place, leave them there, and typically what I'm doing is looking for these shorter candles, 20 to 30 cents at most, and putting my stop beneath those. If the market's favorable and the trade's doing what it should, it shouldn't come back and ever threaten those. And if they do come back and threaten them and stop you out, so be it. You can buy that trade again if it does turn positive for you and sets up properly again in the future. So never ever get into a trade without putting your stop in place. Thanks again, and have a great day.